Hi, welcome to this video today, which is on the 9th of March. It's Saturday. We'll just be looking at what we consider to be a really good risk-reward trade setup shaping up right now in the market in terms of the pair USD MXN, and we're going to the charts in a moment. Now, it is a more minor pair. Most traders will have it on their platform. In terms of being a more minor pair, I like trading USD MXN. It's nice and volatile. I can solve for really good trends. Now, in terms of our strategy in terms of trading this pair, just for new viewers, we're going to be using very simple technical analysis, but we are going to be backing up our view of the charts by using our favorite sentiment tool in Forex trading, the COT, the Commitment of Traders report. It's a totally free tool. Anyone can use it. If you have not used it or you're unfamiliar with it, you can click on a link beneath this video and learn more about it. If you just want to watch the video through right now, just keep in mind what we want to do is always trade with smart money commercial hedgers when their positions diverge away from speculators. Now we're going to go to the charts, and just please do keep in mind when I'm doing my analysis, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major Forex pairs and also all our COT analysis, you can click on the link beneath this video and get live access to our member center. Right, let's take a look at the charts. Right, we are on the COT net traders data first for the Mexican peso against the USD. Now, just for new viewers, on the COT, it's always foreign currency first, okay? So it's MXN USD here. We, of course, trade USD MXN. I'll reverse the chart around in a moment. This chart is really just to see what the smart money commercial hedgers are doing in red against the large speculators in green. And basically, we're looking for divergence between the groups to give us clues to where this pair might go. And I've done A, B, and C. Now, if we look at the A divergence, speculators really long, commercials really short, right into this peak, goes in favor of the commercials, and we see a heavy drop. In fact, commercials, they're just clearing out their hedges. They'll naturally do that. They actually go long right at the very bottom. Okay, B, similar. It's not such a big divergence, but up here, see a nice fall to the downside. C, speculators again heavily long, commercials heavily short. We're already going down. Now, this divergence C is actually, sorry if I get my cursor right, just around the same size as A. So where could we target? We target here, or maybe even here. The selling has already started, and the commercials in the Mexican peso tend to be really good at warning of important moves against the speculators. Every pair is slightly different in its personality, the way the COT works, but this for us is a really good setup. So now what we're going to do is going to reverse the chart around to USD MXN, draw some levels of entry, stop, and target. Right, from the chart daily chart of USD MXN, I'll draw my levels in a moment. Now, in terms of the COT, just for new viewers, it's not a timing tool. We have to time it technically, which we're going to do in a moment, but yeah, it's giving you the idea or alerting you to possible big move coming in the USD. Now, in terms of here, I've written why are the commercials so bullish of the USD. Said in previous videos, you don't actually have to know. You can just trust the commercials and time with your technicals, but we like to know what the commercials might be thinking in terms of why are they so long the USD and why the speculators so short. Well, two key points in my view. Mexico core inflation is slowing, okay? If you look at the recent data, which points to an interest rate cut in Mexico. The only reason the peso is strong is due to interest rates. Really nice interest rate earning on the Mexican peso over the USD. So speculators have sold it to get that, interest rate. It's a favorite carry trade for big speculative funds. But in terms of point number two, they will do this in risk on. Big speculators, they'll want to be in the high yielding currencies and sell the safe currencies. Okay, so USD a safe currency, MXN a risk currency. But you can see it, just generally if you read the media, despite the risk on we've got in the markets, investors are nervous. There's a lot of problems in the global economy. Okay, and when investors are nervous or cautious, they will basically go out of high yielding currencies and buy safe currencies like the USD. Seeing the USD has come up a bit there, not a big move, but it's moved to the upside, and they're selling these high yielders. They're doing it in other emerging markets as well. USD's really powered up on the ZAR, big move. It's even starting to move up on the Turkish lira, which has got the best interest rate earnings of all. And I think all the emerging markets now, because speculators are so short, they're very vulnerable to those speculators exiting on stop and the USD really powering higher. So let's look at the chart. Now, in terms of this pair, if anyone's on my personal pages, we've been long since 1925, just took it off the 20-day moving average. And we've now moved away from the 20-day moving average. You can see, and we have this big fall down, bit of sideways, and then we start to hold the 20-day moving average or around it. We push off there, come back to it, brief poke through, holding around it, then the push off. Okay, so I think we're now on the move to the upside, so just draw a trajectory in there. And where would you buy if you wanted to come in long? My own view is we've broken out above this, or this double top here, previous highs. Okay, so that looks really good support. Okay, nice big break up, ease back a little bit, but I think this pair is a buy on a breakout higher above this candle tail here. Okay, and I think if we look over here, you can see my logic, I hope. There we go. You basically got a double top, got this big red that pointed to continuation. But you had this sort of trying to hold this level on those three candles there. That one came through, that one tried to go back through, then the push down. It's 1963 as a level, okay? So you want to get a little bit clear of that. So something like 1964.50. Coming in fresh, your stop should be back behind this level, say something like 1935.50, something like that. Just off the level. You don't be too close to this level, just in case we do come back to test it. I think if we broke higher and did come back to test it, I think it would hold. Okay, now where could we go? Well, basically here, same as the last COT divergence. Okay, so 2060. And if we look back on the previous chart, you could say up towards 21 level in terms of when we got the chart reversed around as we have now. Now, if you look at that as a risk reward, it looks really good because you've got near enough 5 to 1. Okay. Now, obviously, risk reward is subjective. We know we're saying that it's got to come to fruition, but commercials tend to be pretty active in this pair, or accurate, I should say, in this pair. So for us, break through this level, we could go all the way back up to chart highs on this daily chart, or even to weekly resistance. And I said it earlier, commercials tend to be pretty good in this pair in terms of catching big moves. And I just really like the look of that divergence. I really like the risk reward of this trade, even if wrong. The risk reward really good. Sorry, I'm losing my voice. But it's a good COT setup. And I think, just again for new viewers before I finish, when you use the COT with your technicals, not only do you see the chart in a completely different way, because the big money is sitting behind the chart, your technicals are much simpler. You can keep them very simple. Okay,
So we'll see how this trade setup pans out, but that is the video for today. Thank you very much for watching me as per usual. Take care. Have a good day.